If you take a look at the second quarter delivery of 10 to 11,000 vehicles, is that enough to make up their demand for the full year?
No, I mean, it's not. I mean, what they're saying is, so I think the most important thing in the earnings right now is they still say they're on track for deliveries of the Model X in Q3. If they're selling only 10,000 cars a quarter, I'm not good at math, but you can't get to 55,000 if you add up 10,000 four times.
It has to be backloaded in terms of demand, right?
It has to be backloaded. So at that point, the Tesla, the Model S is going to be, what, 3 years old? So demand of that car is not growing that much, up 2% quarter over quarter. And I think quarter over quarter is a fair way to look at it. Or some people would say year to date or year over year is a better way to look at it. I don't know. But either way, so they sold 10,000. They're saying sales will be flat next quarter. And then something will ramp up in the third quarter. I guess they're counting on Model X sales and continued sales of the Model S in order to hit that production thing.
But as you said,
noting,
yeah, go ahead.
They're losing money like crazy, and they're still losing a lot of money. So their plan is to lose money in every sale, but make it up in volume, and so they think the volume is going to happen in the second half of the year. And they're clearly very much counting on hitting this deadline, even though they've missed a lot of other deadlines in the past.
Scarlet, you have more. You've been digging through some of the numbers.
Yeah, one thing I noticed from the analyst notes leading up to this report was Barclays saying that the first quarter focus would be on gross margins, and we have a gross margin number here for you. Automobile gross margin, if you back out some of the credits it gets for ZEV, and I know that Cory knows the exact what the abbreviation stands for here, but it has to do with the energy credits, the green energy credits.
Vehicle. Yes.
There you go.
Zero emission
vehicles. That's right. 26% on an adjusted basis. That is higher than what Barclays, for instance, was looking for. It was anticipating 22.7%. As for the outlook for this gross margin outlook, Tesla is saying it sees 25% gross margin as well. So that again indicates that it's going to maintain that level and not necessarily fall too much from the first quarter's number of 26%. First quarter total adjusted company gross margin. Total adjusted company gross margin, not just automotive, is 28.2%. So that is higher than what Barclays had anticipated at 22.7%. It appears the consensus among analysts was for 26.4%.
They're also saying prices are going to go up on the car as they sell them into Europe, which is an important market for them. They've had tremendous success selling into, of all countries, Norway. Norway's had some fantastic tax benefits for these cars that probably went away last month or this month, depending on the total number of electric cars sold into Norway. But they got to use special fast lanes, they got tax breaks, they got free parking spaces. But those go away, and that was one of their most important markets. So that's yet another headwind for Tesla as they go into the second half of the year.
You've laid out a few headwinds. One, we were talking about the backloaded delivery for the year in terms of their car. The car is 3 years old. They're losing money, and the Norway tax credit goes away, and Europe's been a strong market. Why is the stock then up?
Because everyone loves Tesla. It's really cool. It's an electric car. Look, if they stick to this deadline, if they hit this deadline of shipping the car, it's the future's so bright you got to wear shades, right? The next car is going to be so great, everyone's going to love it. They're raising prices on their car in Europe. This car for millionaires is now going to be for millionaires and more in Europe as well as in the U.S. If the prices are going to go up by 5% in Europe, which is what they're saying. But if they can come out with a crossover with an SUV in the fall, indeed in the third quarter, I think that's probably positive news here for the company. Again, they keep losing money, but nobody seems to care about that right now.
Does that also is there an implied forecast in China with their targeted vehicles for the full year, 55,000? Can we glean anything from potential growth?
I don't know that you can. They say the headline just crossed in to say they saw a return to growth in orders in China. The problem in China hasn't been orders, it's been deliveries, right? It's been actually going to be able to take the cars. And it's been something of a disappointment to them. They've been trouble getting plates for these cars, getting these cars registered in China, not just in selling them in China. And, the infrastructure, of course, is a big issue for these cars, getting the charging stations everywhere and getting them the functionality for these cars. They sell... they sold 10,000 cars in the quarter. This isn't GM we're talking about here. We're talking about Tesla. They sell these electric cars for millionaires. It's not a giant car company yet. The hope that they will be someday is based on launching new models. They haven't been able to pull that off. Prices keep going up, not down. It keeps getting a car that is supported by massive tax subsidies, whether it's state, federal, international, as I mentioned in Norway. These ZEV credits are no small joke here. And those things are also something that Tesla warns in their own financial filings will be going away in the future.
right, well, you're digging through the numbers here. I want to bring Scarlet in to talk about the numbers and sort of break them down again. Tesla earnings, we do have the stock up slight after market. Scarlet?
Yeah, the stock is up 3.5% to $238.50. Tesla reporting a loss for a second straight quarter here, but the loss was not as big as analysts had been anticipating. The projected loss was 49 cents. Tesla reported a loss of 36 cents, and this follows, again, the second straight quarter of losses, but it follows almost 2 years of profit. In terms of revenue, it's tough to remember, or maybe it should be a quick reminder to everyone that the stock has been on such a roll, yet the company only made $1.10 billion in revenue for the quarter, compared with a consensus estimate of $1.05 billion. And a year ago at this time, Tesla only booked $713 million in profit. And in terms of the number of cars that it delivers, first quarter deliveries totaled 10,045 vehicles. And in the second quarter, it expects to produce about 12,500 vehicles. And there's only one model that it's selling right now. That would be the Model S. Model X is still not available for sale. It's on track to start deliveries in the late third quarter. So that will happen eventually, but it's not happened just yet. In terms of margins, this is one area where Tesla has beaten estimates as well. First quarter total margin is 28.2%. The consensus there was for 26.4%. So that is higher than anticipated. And when it comes to comments on China, there were some difficulties there over the quarter, which did cause a stumble in the share price. And Tesla acknowledged that as much, saying while we still have work to do in China, we saw encouraging signs of a return to growth in orders there as well, without any specifics. Alix?
All right, thanks, Scarlet, for helping us recap the headlines for Tesla. Cory, we do have the call coming up, of course. What's the number one thing that you're going to want to hear from it?
I mean, you know, they're going to want to know about what makes them think they're going to be on time and hit this deadline with this car. What are they going to do as Model S sales start to slow down and these vehicle credits go away in California, in Norway, in the places where this thing has been subsidized? I mean, this is a tax-subsidized car for the very rich.
Is that where the Model X comes into play? I mean, we're looking at deliveries in the third quarter. Is that what it's there for?
They're going to need something new, right? They're going to need something. They missed on revenue. They beat on adjusted earnings per share. But fundamentally, they're going to need to grow this into a much bigger company to fit this current market cap. And they only do that with more vehicles and increasing sales of their vehicles and anything else, batteries, whatever.
And you pointed out Tesla still keeps losing money, right? But we are seeing gross margins incrementally gnaw their way higher here as they wind up scaling up, as they wind up selling, if it's true, 55,000 vehicles a year. One
of the things that they'll probably they should talk about in the conference call, but they won't, which is backlog. So they're talking about production exceeding deliveries in a couple of quarters in a row now. What happens to those cars? That helps gross margins, right? The more you run a factory, the more efficiently you run the factory, it helps gross margins. Their gross margins look better when you compare them to other automakers because they own their dealerships. So GM sells cars to a dealer, and they don't have the cost of running the dealership. Tesla does have that cost, but the gross margin of the car is worse. So the gross margin of the car for Tesla looks better, but they've got the cost of running the dealerships, which GM doesn't have. So their gross margins aren't apples to apples when you're looking at other dealers or you're looking at other car makers here. But yes, they miss on the top line, they beat on the bottom line. But the bottom line is, of course, adjusted. They don't have actual profits, just
right,
pretend
which is
profits.
important to keep in mind.